Can you imagine him being in a boardroom and not running the board? I know that they're welcoming him, but I think he's a Trojan horse.
In this video, VW are in serious panic mode, making an incredibly embarrassing admission and some drastic changes. As I predicted at least 420 separate times over the last 2.5 years, VW, the world's second largest automotive manufacturer, has finally realized they are absolutely and bankruptcy is inevitable. This is huge news and will no doubt send shockwaves through the legacy automotive industry. Plus, Jim Cramer, Morgan Stanley, and some idiot on YouTube share more thoughts about Elon Musk's Twitter investment and what it means for the company. So, let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks. Check out the links in the pinned comment below. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. You can also pick up some Tesla, Elon, and investment themed merch in the merch store, so check out the links in the pinned comment below, and thanks for your support. So the big news of the day over here on Financial Times, quote, VW to scrap dozens of models and focus on premium market. Now we'll need to read between the lines here a little bit, but that's the whole point of this video. People's car pioneer will prioritize more expensive vehicles such as its Audi and Porsche models. I wonder why they might be doing that. Volkswagen, the pioneer of the people's car that epitomized the auto industry's obsession with expansion, will axe dozens of combustion engine models by the end of the decade and sell fewer cars overall to concentrate on producing more profitable premium vehicles. We'll talk more about the implications here in just a moment. Quote, the key target is not growth, said Arno Antlitz, chief financial officer, in a reversal of the stance taken by former VW executives. We are more focused on quality and margins rather than on volume and market share. VW, he said, would reduce its lineup of petrol and diesel cars, which consists of at least 100 models across several brands, by 60% in Europe over the next 8 years. So let's talk about these two stunning quotes and what I personally believe, I'm just kidding, what I know they mean. The key target is not growth. Let's take a moment. Why would that be? Generally speaking, most companies ideally are trying to grow, trying to gain market share. Usually that's what you do as a company. Instead, we are more focused on quality and on margins rather than volume and market share. Let me explain what this means. The key target is not growth translates to, instead of focusing on growth, we're focusing on survival. We've just realized we're absolutely screwed. We're going to lose market share. Nobody's buying ICE vehicles in the future. Tesla has an unassailable lead. We're fucked. It's our fault. What are you going to do? At least we can admit out loud, we're no longer chasing trying to be the #1 automotive manufacturer in the world. Instead, we're just trying to survive. But the second quote is the far more important point. We are more focused on quality and margins. This is it. It's not about the quality, it's margins. Why margins? VW have also realized, oh fuck, our margins are going to collapse. The profits on ICE vehicles are going to go from okay to poor to negative to completely unsustainable. We're not going to be selling ICE vehicles by the end of the decade. We're in big fucking trouble. We need to immediately scrap all the low margin vehicles and just focus on the high margin premium stuff. Otherwise, we will go bankrupt. By the way, this is absolutely the right decision and move from Volkswagen. I've been predicting this is exactly what's going to happen. ICE sales are going to collapse. The margins on ICE vehicles are also going to collapse because less and less consumers will be buying them in subsequent years, meaning economies of scale start working in reverse, meaning that the vehicles are more expensive to produce and they're producing less of them. This means lower profit margins, eventually flat profit margins, then negative profit margins. Then why the fuck would you be selling vehicles you're losing money on, you idiots? VW have finally figured this out. Just one problem. The timing is still way off. They think it's going to take 8 years to phase out just 60% of their ICE models. I don't want to rain on anyone's parade here, but I mean, I may as well put it on the record. 2025, 2026, probably at the latest, is about the point where this should already have taken place. The number of consumers out there who will voluntarily choose to opt for an inferior product on every meaningful metric from safety to performance to total cost of ownership, and who will pay a premium for such an inferior product is rather small. The article continues, quote, VW's new strategy is a sign of profound changes in the wider auto sector, aka Tesla, which for decades has attempted to increase profits by selling more cars each year, even if doing so required heavy discounting. I mean, why? By the way, in theory, if we were talking about electric vehicles, computers on wheels, this would actually be a fair strategy. Build up a user base. It's not about the margin on the initial vehicle, but it's the recurring software revenue. But VW doesn't have this business model, so why on earth would they have been chasing higher volumes at lower margins? It seems insane to me. It's just such an inefficient business model. The more products you sell, the less money you make on each one. Huh? You know what Tesla does? Instead of heavy discounting, they just figure out ways to make their product cheaper. That way they can maintain margins while selling in lower and lower price points. Former VW chief executive Martin Winter Winterkorn, who resigned in the wake of the diesel emissions scandal, had made it his goal to beat Toyota and General Motors to the title of volume number 1 by 2018. In pursuit of global dominance, the Wolfsburg-based group retained a large presence in unprofitable North and South American markets. Wait a fucking second, what? According to this article, VW's entire North American and South American automotive businesses are unprofitable. 1. How? And 2, what the fuck are they doing? What the fuck were they thinking? Why on earth would you enter, let alone continue to operate in markets in which you are not profitable? I don't get it. The article continues saying that VW were flooding North and South America with new models, even as it sustained heavy losses. Why? However, a severe chip shortage caused by the plague forced car makers to cut production last year in the face of surging demand. This allowed brands such as Mercedes and BMW to charge more for their models and make record profits in 2021 despite selling far fewer vehicles. A similar strategy catapulted VW to the top of the earnings table in Germany's DAX index, posting more than 20 billion euros in pre-tax profits. The company prioritized more expensive vehicles produced by its Audi and Porsche brands, which account for the bulk of the group's profits. This is putting things in perspective. VW's entire North and South American businesses don't make any money, they lose money, and VW only has a couple of brands that have reasonable profit margins, and everything else is razor-thin margins at extremely high volumes on products whose sales are literally falling off a fucking cliff, going eventually to zero. This is not going to end well. VW starting to figure it out. Executives at all three automakers have been keen to stress that this practice will persist even after supply chain bottlenecks subside. Quote, "I would like to really emphasize that we are not driving a volume strategy," BMW's chief executive said last year. Antlich said that even VW, which prided itself on being the world's largest car maker before losing the volume crown to Toyota, and whose executives privately used to target selling 11 million vehicles in a single year, was no longer seeking to expand for the sake of size. Quote, "We have a significantly lower fixed cost base, so we are less dependent on volume and less dependent on growth," he said, pointing to the fact that VW had managed to reduce fixed cost of 41 billion euros in 2019 by 10% ahead of schedule while investing in software development and new units. Even VW's 52 billion euro push into electric vehicles, the largest investment package of its kind, would not add unnecessary volume, Antlich said. Quote, "We are not adding capacity, we rework factory by factory," he said, referring to plants in Zwickau and Emden where combustion engine production lines have been converted to construct electric cars while workers have been retrained. But he also admitted calculations that electric vehicles would soon be as profitable for VW as combustion engine models had been thrown into doubt by the soaring cost of raw materials for batteries. Let's just take a real quick moment here. VW admit most of their vehicles make almost no profit. They're going to be scrapping most of those models. They're just focusing on the high margin stuff, while simultaneously admitting the 650,000 different electric vehicle models they're promising by yesterday are not likely to be profitable. Did you catch that? This is really bad. I mean, really bad. In essence, VW have said, well, we don't make money on most of the vehicles we sell. In fact, we don't even make money in some entire countries. But good news is we'll just stop selling the models that don't make any money and then start selling models that we're concerned we won't be able to make any money on either. That's what's going on right now. Quote, "These $50,000 nickel prices per tonne were not basically priced in because we expect hopefully the war will end soon and then the raw material prices will at least go a little bit more back. I mean, in theory, yep, sure, but over the medium term, no, material costs are going to the fucking moon because A, there's not enough, B, there's a huge lead time from mine concept to mine operation, and automotive manufacturers just didn't do the math well. Besides Tesla, didn't lock in the long-term 5, 10 plus year contracts. Therefore, it's going to be a major struggle to get the necessary supplies and materials. Therefore, the price of said materials is going to the moon. It's going to get a lot worse before it gets better." He added that the principle of cost declining over time remained intact and that new battery technology would bring prices down in the long run. Absolutely. This is incredibly big news. Now, as I said, I've been predicting this for 2.5 years in a row. It was inevitable at some point in time, legacy automotive manufacturers would start to figure out, oh, no one's going to buy those ICE cars in the future. We are in big trouble. We're going to have to start slashing jobs, slashing models, cutting costs, do whatever we possibly can to survive, and we probably won't anyway, but at least we need to try. We've transitioned from the point of awakening to public admission. The fact that VW have now said out loud, A, they're not trying to grow. B, they're going to be focusing solely on vehicles that actually make money, and have announced they'll be scrapping 60 plus models by the end of the decade is huge. There's a few very valuable lessons here from manufacturing companies. Obviously, skating to where the puck will be, having the awareness to know what the future looks like. Hello, electric vehicles, and that kind of would have helped, but it's a little bit too late for that. I just want to talk a little bit about unnecessary complexity. We've seen Tesla, with just a few vehicle models, absolutely dominating every category they enter. Tesla has 4 vehicles on sale to consumers, and to be honest, if you scrap the S and X, no one would notice. The Model 3, and in particular the Model Y, are basically doing all of the heavy lifting for Tesla right now. 2 vehicles, a sedan and a compact SUV, destroying every category they enter. And it's not even a close contest. We also know that Tesla reused many parts from the Model 3 to Model Y, many parts in common, meaning lower overhead. They can buy parts in larger bulk, get lower prices and so on. In addition, there's far less complexity. If Tesla's already ramped up and is producing at volume the Model 3, then they engineer the Model Y to use a lot of the same components and parts. There's a huge amount of overlap. There's less of a learning curve. With just these 2 models alone, in the future, Tesla will easily be selling 3, 4, 5+ million vehicles per year, just the Model 3 and Model Y combined. Meanwhile, a company like Volkswagen has 100 fucking models, and they're selling less than 10 million vehicles per year. This is just nonsensical. The less complexity, the less variations, the better for a company, and Tesla's proven you don't need 450,000 different models. If you've got a really great product that offers extremely good value and shits all over everything else in its price range, you'll sell as many of them as you can make. In short, Volkswagen have made an embarrassing but an important admission finally out loud. They've realized they're in big trouble, they're headed for bankruptcy, and they're scrambling. The fact that they're scrapping most of their vehicle models, the fact that they've said out loud they're no longer trying to grow, they're just focusing profitability, really says all you need to know. VW know they're on the brink of bankruptcy and they're going to be scrambling, doing everything they possibly can to survive. It's not going to be pretty, there's going to be huge layoffs, enormous losses for years to come. I hope that they survive, but I wouldn't be counting on it. And now onto a very short clip of Jim Cramer sharing his thoughts on Elon Musk's Twitter investment.
Twitter is adding Elon Musk to its board. Musk just tweeting, looking forward to working with Parag and Twitter board to make significant improvements to Twitter in coming months. Let's get down to the New York Stock Exchange. God, that covers a wide range of things, doesn't it, Jim?
Yeah, it sure does.
It's in the eye of the beholder, too, isn't it? Let's see. We could all have our own view of what would be improvements. That's what makes the world go around, I think. But I wonder what Elon is talking about. An edit button?
He's playing his cards to his vest. I mean, one thing, can you imagine him being in a boardroom and not running the board?
This is a good point from Jim Cramer. Can you imagine Elon Musk being in a boardroom and not running the show?
I know that they're welcoming him, but I think he's a Trojan horse. There's no way that the absolute current makeup of the board and the way people have been going is at all in agreement with what Musk would want.
This is an excellent point from Jim Cramer. It's clear and obvious that on many issues, many topics, Elon Musk versus the overall consensus at Twitter are on very opposite ends of the spectrum. And Elon Musk hasn't joined Twitter to become part of the hive mind, quite the opposite, in fact.
Musk wants a very different Twitter.
Yeah, what do you think? In your view, what is that? How do you mean? What do you mean?
I think he wants to be more substantive. I think he's trying to figure out how to make it so that it's not just scatological negatives being said. I mean, you have 80 million people, whatever, how many followers he has at this very moment. And I think he'd like to somehow convert the followers into something good besides just following.
Right.
And I think that all the things he's deciding that he's put out are all about how to kind of make it a little bit better, a little more flexible, but maybe to get it so that it's not a dying on the vine product. The company always says things are going great, and yet the stock always indicates the truth.
Now, I don't doubt that Musk will have plenty of ideas and improvements for Twitter in terms of the business itself. But again, the key reason, the primary reason for Elon's investment in Twitter, clearly just to promote and uphold the principles of free speech. I'll share some thoughts on what I believe Elon Musk's top priorities will be now that he has a seat on the board at Twitter in just a moment. But before that, let's see what Morgan Stanley have to say about Elon's Twitter stake. Quote, Elon and Twitter, what could this mean for the Musk economy? Morgan Stanley with about the 10 trillionth note in the last few days. Adam Jonas and team really stepping up the game. I like to see this. $1,300 price target. And before we get into this, again, I need to do this. I just don't understand what's going on here. Like, I'm at a point now with Morgan Stanley's EPS estimates where I think I must be so dumb I just don't understand what they actually mean, because surely these can't be real. What we're looking at here is EPS estimates by year in 21, 22, 23, and 2024. The EPS estimate here, the top row, this is actually the Wall Street consensus estimate. We can see that down here in the notes. There's a modelware EPS figure below here, which apparently is Morgan Stanley's research estimates. Please somebody tell me in the comments below if I'm misreading this. To me, this sounds like Morgan Stanley's earnings per share estimates for Tesla. The reason I'm so confused here is because these don't make any fucking sense at all. Not even close. The margin of error here is going to be insane. What am I missing here? 2022, we've got $7.63 in EPS. What planet are these guys on? It's going to be almost double this. In 23, they're only at $10.90. 24, only at $15.20. Can somebody please explain, am I an idiot? I mean, that might also be true, but in this context, am I an idiot? Do I just not understand what they're saying here? Or is Morgan Stanley seriously suggesting that their research is pointing to $7.63 of EPS this year, not even $11 next year, and just over $15 the following? Please keep me accountable, ladies and gentlemen. Somebody set a reminder, check back about this time next year. Let's see where Tesla's 2022 full year EPS lands. My bet, it's closer to double $7.63 than it is to $7.63. Let's read the note. Quote, on Monday, April 4th, we distributed a survey to our email distribution list comprised of institutional investors and industry experts asking the following multiple choice question. In your opinion, what's the primary motivation for Elon Musk taking a 9.2% stake in Twitter? By the way, these are the results of 38 individual responses, not a huge sample. 61% of respondents selected A. Elon's weighing in on free speech. Tick. They nailed it. Seeking greater influence on Twitter to preserve his platform. Now, I think the terminology here is a little bit of a stretch. It's not really Elon trying to preserve his platform. He's just trying to do good because he sees Twitter going down the fucking toilet because of the insane censoring, the clear partisan bias, the fact-checking, the blocking of content and articles that are actually legitimate and true, and then, oops, we made a mistake, sorry, over and over and over. I think a lot of folks are thinking about this. Hang on, what's in it for Elon? What's Elon get out of this? And people are failing to realize what Elon gets out of this. It's a sense of satisfaction knowing that he's taken the set of actions that he thinks has the highest probability of making the future good. An additional 24% of respondents said A, definitely it's about free speech, but may also portend future Tesla strategy around platform, media and content. Maybe, unlikely, who knows. 5% of respondents said it's just a passive investment, don't read too much into it, that hasn't aged well, and 10% of respondents said something else, question mark. Investors are asking us what could be the potential significance of Elon Musk's investment in Twitter from a Tesla perspective. Before we see Morgan Stanley's thoughts, in my opinion, there's not really too much to read into here. Sure, around the fringes, you might be able to reason your way into something that maybe has something to do with Tesla. Oh, it's his platform, 80 million followers, make sure that he doesn't get banned. Maybe he just wants to improve a service that he's using basically as Tesla's marketing department. Possibly. Maybe Elon's concerned about eventually getting deplatformed. A valid and legitimate concern with the absolute insanity today in big tech. But again, it just comes back to the free speech thing. I don't think people are really getting this. This is the primary reason. Let's see what Morgan Stanley have to say. A form of hedging, key pillars of the Muskonomy, transport, energy, space and AI, may involve significant changes in technology, investment, social acceptance and regulatory curation that many may find controversial and will disagree with. A scenario of certain communications/messages excluded from powerful platforms, either in part or entirely, could present a significant impediment to Musk's long-term vision. This is a fair point. Could the Twitter approach be a hedge to lower the risk of potential impediments? Tesla has benefited greatly from access to the Twitter platform to communicate to consumers, investors, employees, and other stakeholders, most of whom do not read press releases. Fair point. Elon Musk's ability to convert his enthusiasm into broad public support is an underappreciated ingredient for Tesla's success to date. Fair. Tesla's future will increasingly rely on its value as a platform and an ecosystem that we believe will ultimately depend on content and community. Hard to argue with this. Tesla's fleet eventually will exceed 100 million vehicles. Think about that. That's a big user base. No, seriously, think about that. Go look up the most successful video game consoles ever by number of units sold in the history of the console. You may be surprised. And now, as promised, I'll share what I personally believe Elon's top priorities are for Twitter. As I tweeted yesterday, quote, I suspect in approximate order of priority, Elon Musk wants to 1. Uphold free speech principles. This is the only thing Elon Musk achieves. I think he'll believe this is a massive success. 2. Departisanize and open source the algorithm. For those of you who aren't aware, Twitter, in fact, all social media, all big tech, and the majority of the United States mainstream media skews heavily to one end of the political spectrum. The majority of people deciding whether or not what you said was hate speech or a biological fact have certain ideological beliefs. The same beliefs. This is not a great recipe for avoiding the intentional or accidental suppression of extremely critical information around elections. Not that anything like that happened with Twitter, I'm just pulling examples out of my ass. This increases the risk of everybody being involved in an intellectual circle jerk agreeing this is the right course of action. We all agree because we all believe the same stuff. We don't need any other perspectives. We know we're right. The end. Number 3. End spam bots. the bane of my existence, especially here on the YouTube comments. You guys have no idea how much time I spend every day just permanently blocking spam bots. There's account after account after account. I delete one, 10 more pop up. Speaking of the spam bots, breaks my heart every time I hear somebody's been sucked in by one of these, but I have to say, honestly, I mean, it's a hard lesson to learn, but clearly it was a necessary lesson to learn. It shows a lack of skepticism, a lack of caution, a willingness and an ability to delude oneself, and it also goes against everything I've ever said on this channel. I never give investment advice. I encourage everyone to use their own fucking brain. And this is clearly an example of not doing so in more ways than one. And I'm saying this as somebody who himself, embarrassingly, once also got scammed. I invested in a gigantic crypto Ponzi scheme, random thing. It wasn't a huge amount of money. Still hurt. At the time, I thought, oh, my friend who's really smart invested in this thing. He told me about it. He's making lots of money. Can't go wrong. I don't need to think. So just to be clear, as somebody who himself moronically got scammed once, funnily enough, relating to crypto, can you believe it? Almost a decade ago, mind you. I'm not here saying I'm perfect. Far from it, obviously. But if you've ever been scammed, especially recently in YouTube crypto spam comments or even on Twitter, it is a huge fucking red flag. Elon's 2 bonus priorities, I mean, if he can make this happen, great, but it's probably not an absolute must do. 4, reinstate those accounts banned as a result of 1, failure to uphold free speech principles, or 2, extremely partisan black box Twitter algorithm. And 5, reduce the probability of algorithm-induced echo chambers. It tends to be the case that every social media platform, we build our own bubble, our own circle of people we're following, opinions, etc. They tend to align closely with our own. If we're not careful, and in the case of Twitter, there's a major danger, which is already what happens on Twitter here, where the algorithm realizes, oh, this person believes this and wants to hear this and see this, we'll give them more of that and not show them this, which might be a useful opposing opinion. The ultimate example of an echo chamber, of course, is none other than the self-hating, basement-dwelling adult virgins who identify as members of Tesla Q. These morons, and I want to underscore that, these completely brain-dead fucking morons are so dumb that they have a shared list of accounts to automatically block on Twitter. And what's the common denominator in every one of the accounts on this block list? They're Tesla bulls. These moronic cult members are so dumb that they intentionally lock themselves into an echo chamber and block any potential positive comments that anyone might say about Tesla. This is insane. These fools are so dumb they've built a prison for their minds. This is cult-like behavior. Removing the possibility of dissenting opinions even being heard. It's exactly what Tesla Q have done. No wonder these fucking idiots are still shorting Tesla stock. In the case of Twitter, it's not necessarily that people are building their own echo chamber intentionally. It's just the algorithm over time decides and figures out, oh, this person likes this and they believe this. Let's give them more of this and less of that. And eventually you stop coming across content and opinions that oppose the views that the algorithm knows you want to hear. Not good. So to recap, Volkswagen have finally said out loud, we're fucked, guys, we admit it. We're desperate to stay alive. We just need to focus on profitability, not growth. We're going to kill a bunch of models. We're destroying the ICE business. We know it's not going to be around. But given the fact that Volkswagen tends to sell around 10 million vehicles per year, world's second largest automotive manufacturer, very close behind Toyota, number 1. This is going to send shockwaves through the automotive industry. Think about the discussions happening within boardrooms today. Surely a few people whose brains work might pose the question, hey guys, if Volkswagen's doing this, getting rid of like 60+% of their vehicles. They're saying out loud that they're focused on profitability, not growth. Oh, and by the way, they probably can't make a profit on their EVs until material costs plummet, which may not happen. If they're doing that, why are they doing that? Should we do that? Of course, this assumes that the folks in legacy auto aren't completely brain dead, in which case business as usual. And Elon Musk's Twitter investment continues to have tongues wagging. There's been so much coverage and discussion within the mainstream finance media and the mainstream media about this. It's probably the second most covered Tesla-related thing of all time. I'd love to know what you guys and girls think. Let me know in the comments below, what do you think Elon Musk's priorities are for Twitter? List them in order as well so I can see where everybody's at. It's always great to hear opinions that you may or may not agree with. And lastly, don't forget to join Patreon with the card in the corner or the link in the pinned comment to gain access to well over 100 exclusive Q&A videos, loads of other exclusive content and perks, plus my up-to-date Tesla stock price targets. And at the higher levels, you can also gain access to my Tesla valuation model. I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.